What's up, guys? It's your Money Cat here, and today we're going to talk about Tesla. Following in the footsteps of Apple, Tesla just announced a 5-for-1 stock split, meaning that for every one share of Tesla, you will get 4 additional shares. However, the stock price will be cut into 1/5 of current value. So overall value remains the same, it's just you have more shares at a lower price. Like I talked about in the Apple stock video, the main benefit of a stock split is that it brings the cost of shares down so that retail investors can more easily buy one share. Now, I know some people are saying that it doesn't matter anymore because there are fractional share buying. However, human nature, we love buying in whole numbers and even numbers. So I know you have the ability to buy, let's say, 0.43 of a share, but most people would prefer to buy one whole share of Tesla rather than, some decimal point. For example, today I was very close to reaching a round even number in my portfolio. So I was forcing trades, I was pushing things, even though in the big picture, reaching that number today or tomorrow or next week, it matters not. I see lots of similarities in Apple stock split and Tesla stock split in that both companies have lots of good catalysts coming up. And there's a one big difference between the two, which will alter your timeline perspective. So make sure to check out the Apple stock review video as well. I'll put the link in the description box below. And without further ado, let's get to Tesla. Let's get the basic information out of the way. So they announced 5-for-1 stock split, and you need to own the Tesla share on August 21st. That's the date of record. And then the shares will be distributed after the market close on August 28th. That's on a Friday. And then starting the Monday after on August 31st, everything will be reflected with the new stock price at 1/5 of previous value. And of course, following this announcement, the very next day, Tesla ran up 13%. Go Tesla. Now let's talk about what Tesla's got going for them with this stock split. You'll hear lots of arguments like only the retail investors will be interested in the stock split and they really don't affect the market that much. You'll also hear that there's now fractional share buying, so this stock split, it really doesn't do anything, especially when overall value doesn't change. However, take a look at the top stocks on Robinhood that had most increase in shares. Number 1, Apple. Number 2, Tesla. What do you know? Those two stocks are the two that announced stock splits. Coincidence? Maybe. But what I want you to know is that since these two are the most bought stocks on Robinhood, aka the retail investors, while it is true the retail investors probably won't affect the overall market that much, these two stocks will be the ones that they affect the most. So compared to other stocks, retail investors will have more power to influence these stocks. Tesla also has a shareholder event coming up on September 22nd of this year, which is just over a month away, and it's called the Battery Day. Likely on that day, they'll announce some new technology they've discovered with battery and also the progress they've made, which is really important because lowering the battery price will ultimately lead to lowering the cost of car manufacturing. And you can see on this graph, 2010 we started all the way up here for the cost of battery, and then it has been coming down very rapidly, and now we're entering right here. It is below a $200 mark per kilowatt hour. So the lower this goes, the lower the cost of manufacturing electrical vehicle, which will affect the bottom line. When we talk about Tesla, we often talk about how it's the leader of all the EV makers. But let's not forget that they're also the leader of autopilot. This graph shows how many autopilot miles they've been accruing. It's been growing at an exponential rate, reaching 3 billion miles driven by Tesla Autopilot this year in April. They've been able to accrue these miles mostly because they have the vehicles out and they're gathering data as its users are using their cars, which is very, very smart. This is ridiculously far ahead of any other competitors in the autopilot market right now. As a comparison, Waymo, which is one of their competitors, they're backed by Alphabet, the parent company of Google. They've only logged 20 million miles as of January of this year, compared to Tesla, which had 3 billion miles by April of this year. The future for Tesla looks bright, as electric vehicles only account for about 3% of total global car sales. So there's so much of that pie to be had by electric vehicles. And I believe electric vehicles will be the future, and this 3% will just continue to go up every single year. Let's summarize all this in a pros and cons list. First, the stock split I think will help Tesla because it'll ultimately lower the entry price for retail investors. As you saw, Tesla is one of the most popular stocks bought by retail investors, so this will have an effect. Second, there's still the possibility of being included in the S&P 500. I think the confirmation of this will also be a positive catalyst for the stock price. These two kind of go hand in hand. Tesla is so far ahead of competition in both electric vehicle and autopilot. This is a very important distinction. They are related, but they're not the same thing. For example, it's like if you're a basketball team, you have the #1 offensive rating and the #1 defensive rating. Although that doesn't guarantee that you'll win the championship, the chances are that you have a really good chance at being the champions. Furthermore, like I said, the electric vehicle market is only taking 3% of the global vehicle sales, meaning that this number will continue to increase, and as EV makers continue taking more of this pie, Tesla is in an enviable position of being the very best in this department. Why do I think electric vehicles are the future? Well, because other countries started offering credit for gas emission that's saved by driving electric vehicles, meaning that you actually get some money back from the government for driving electric vehicles. This is a very good thing for the environment and for future of electric vehicles. Battery price continues to decrease with evolving technology. This will ultimately lead to lower cost of manufacturing, which can lead to increased profit margin, or this could be reflected in lowering the cost of the cars to customers and driving up the sales numbers. We will see what kind of progress Tesla has made very soon on September 22nd on Battery Day, which I think will be another big catalyst that's coming up right around the corner. Now let's take a look at some cons for Tesla. There is so much competition popping up in the electric vehicle market. There's NIO in China, Nikola, all the old gas car companies are now starting to go into electric vehicles. I do not believe they pose a real threat right now to Tesla because Tesla is so far ahead of them. But the more competition there is, the more nibbles they'll take away from Tesla's market share. Secondly, this is where I want to make a distinction between Apple and Tesla. In my opinion, this is the biggest difference between the two. Not necessarily saying one is better than the other, but this is definitely a difference. Apple, they have a history of strong fundamental story. Their products are all over the world. You know what you're getting with Apple. With Tesla, even though it's a very good sign that you're seeing more and more Teslas pop up on the road and that they actually have a product that are being sold, which cannot be said for a lot of the other electric vehicle companies. but their extremely high valuation, they can't be justified by the normal metrics, meaning, for example, their profit, their revenue, their number of cars sold. For example, in 2019, they sold about, I believe, 375,000 cars or so, and Toyota sold over 10 million cars in 2019, yet Tesla now has bigger market cap than Toyota. That just does not make sense whatsoever. So what I'm trying to say is Tesla acts more like a speculative stock rather than those blue chip like Apple. I'm not saying that speculative stocks are bad, but it is a fact because Tesla is definitely more volatile. It is definitely more momentum driven. As you saw today, I mean, just based on news of stock split, it went up 13%. Tesla still has a very high short interest ratio. So while I think Tesla is a great buy and hold for a long-term investment, I think you need to have a longer time perspective for its metrics to truly catch up to what it's capable of. Remember, the global electric vehicle market share is only at 3%, so Tesla still has a lot more room to grow. It's not like everyone will just all of a sudden go out and spend money to buy an electric vehicle while their current car is running very smoothly. So it will take years for the market to shift towards electric vehicles, but it'll get there gradually. Because of the high volatility and high volumes, Tesla is also a really good stock to day trade. So we're going to look at the chart and see what we can decipher for the near future. We're looking at Tesla chart on 180 days, 4-hour time frame. We're going to go ahead and zoom in here. So recently we've been in this horizontal channel for a while. You got your support around 1364, and then mini resistance around 1550 or so. So we've been in this horizontal channel, and then with the news of stock split, it shot up 13% today, going from the support all the way to the resistance. So now what will Tesla do? Looking at the MACD and RSI, it looks like Tesla still has some room to run next few days, which means that if it does break through this resistance right here around where it's at pretty much, then I can see it going up probably at least 1700, which should be this resistance right here, and even all the way up to 1800, which was the previous high. So that'll be another about 8% gain. And then if it does go all the way to 1800, 15% gain. And like I said, Tesla is more of a spec stock, momentum stock. So it'll get there in a hurry if there is some drive behind it. So make sure you don't miss it. Overall, I'm looking for it to reach at least 1700 in the next week or so, and with the possibility of reaching close to 1800, but I'll definitely reevaluate around 1700. I think once Tesla goes through its stock split, it'll pick up even faster than Apple, because just psychologically going from current price down to somewhere between 300 and probably 350 or so, that's a huge drop, and it seems such a long time ago when Tesla was around those levels, even though that was only back in the March low. I think the future is bright for Tesla in terms of long-term hold, as more people will likely to shift to electric vehicles with autopilot function, more technology built into the cars. That will take some time, as cars are not just small investments that people make. They are expensive vehicles. So it will take some years for more people to shift over to that market. But I think it is a great long-term hold, in addition to being a great day trading stock, because it moves so much based on momentum, news, and there is so much volume on it. You can trade the stock itself or the options, and you can get in and out relatively easily. Thank you so much for watching. Please write in the comment section below what you think about Tesla and how high you think it can go after its stock split. If you like this content, please like the video and subscribe to the channel for more stock analysis and stock option trading. Until next time, stay green and I'll catch you on the other side.